Thank you, Roderick. This guy is really cool. I met him last night for the first time, and I want to learn those magic tricks because I also want to make more passive income like this. So what if I were to tell you that regardless of your background, regardless of the capital that you have, the income that you have, or the investing know-how that you have, that you can go from zero financial wealth to financial independence. And not only that, you can build 6-figure and then 7-figure portfolios with very little time spent if you have not done this yet. Sounds too good to be true? It is not. It's just the know-how of the 1%, having a clear system, following the plan, and then achieving the goal. It's not a question of if, but just a question of when. If I talk to people about investing, money, or inflation, often I see the question marks in their eyes. They think, I need a lot of capital to do it. Why should I invest? Inflation is not too bad. Money is sound. And I can understand this. I was in the same situation. I did not have the knowledge and the know-how. But if you dig in deeper, and we will in this presentation, we will find out what is actually money, how does it work, why do rich people get richer, and not only that, I will also tell you how you can get started with investing successfully and using the same tactics that the 1% of people are using in investing and growing their capital. Maybe one more thing about investing and money before we start. So I think it's about like this. Just in this room, we have this projector, we have audio, we have nice video, we have this beautiful room, the chairs you're sitting on, all of this is the result of technology. The technology is being built by businesses, and the businesses are built by entrepreneurs with good ideas, developing those ideas, selling them on the market. But the entrepreneur, the businesses themselves, they also need the capital to do it, some little, some more. And this is where the investments comes in. So this is economics 101. You need not only the entrepreneur and the businesses, you also need the capital and investments. That's why I think investing is important. And one thing about money, for me, investing is a tool to get money, and money is for me a tool to get other things in my life that bring me joy. For some of you, that can mean more travel, or not working till you're 70, or maybe just you want to spend more time with family and friends, anything like that. I think money and investing is positive energy for me. It gives optionality, and yeah, that's what I want to share with you. So let's dive in. So these are the 3 parts: financial system and money. We get started with that, then why rich people get richer, and then how you can get financial success with investing just by using simple principles. Financial system and money. Here we see the interest rates. So this is the US Fed funds rate. You see a big downtrend the last 40 years. Now we are at 0% interest rate. What does this mean? The interest rate is just the cost of money. This means money is freely available. You can easily borrow it. It's very low cost attached to it. But it also shows the economy is not that healthy if money has a cost of 0. But it's freely available. Also, you see here the money printing. You see the balance sheets, the assets of major central banks in the US, the Federal Reserve, the ECB in Europe, and the BOJ in Japan. What you can see is this trend is really going down. So basically, even before 2008, but especially then during the major financial crisis, the economy was doing badly. We have aging demographies, we have high debt levels, and so on. A lot of factors that contribute that the economy is not growing as fast as previously before. And the reason why they print this money is to save, of course, jobs, businesses, the economy. But the problem is they print so much money, yeah, it has short-term positive effects. But although they save jobs and the economy and the businesses, the currency itself, it's getting destroyed. And this is just uncontrolled. Also in the Corona crisis, you see a big spike up. So the direction is clear, the trend is up. The only thing you need to know, they print money at unprecedented scales, more and more and more, and this is inflation basically. So no way there's 2% inflation if you look at this, You don't need to be a rocket scientist to figure this out. Money printer goes burr. Here I want to quickly explain what monetary inflation exactly is. Now imagine you have here a number of goods and services in the economy. It can any product, for example an iPhone or something like this. It's worth $10 per unit, which would be cheap for an iPhone. but you have also a couple of number of money units. So not only the products in the economy, but also the money units. And now they print a lot of money, and you see on the right side, the number of money units doubles, but the economy itself, it's not getting any stronger. So basically, you have the same number of goods and services produced, but double money supply. And now your money is not buying you that product for $10, it now costs $20. So this means your purchasing power is going down, and this effect is happening to you, and that is why if you do not invest and just save your cash in the bank, this will happen to you slowly but surely. This is the reduction in purchasing power, and yeah, that's why the rich get richer, the poor get poorer, because the rich know it and use methods to basically take advantage of it. Here you see also, for example, 1970, 65 cents Big Mac. Now in 2022, over $5. Now the question is the Big Mac that much better? Is the sauce getting better or something like this? But for me, I cannot imagine what this changed, but definitely this is the loss in purchasing power in simple terms. And yeah, this is a long time period, but still it shows the effect is real, you know, and you can understand all of this. This is in a different picture. Basically, the reduction in purchasing power, it just means this is a melting ice cube. So basically, your money is buying you less and less over time, and the effect is really dramatic, and the trend is clear. So you know what I mean? It's quite amazing how powerful this trend is. You will also get the slides later, so no worries. All is good. Here, I just want to show you the evolution of money. So, for example, we had the gold standard. This was commodity money used for thousands of years as money. But then we had the gold exchange standard. Then paper money was introduced, but it was not pure paper money. It was backed by the gold. So you could redeem this bill for a gold bar. Okay, so it was still backed. And now we have the fiat standard. Actually, not that long. 1971, Nixon abolished the gold standard. So you have purely paper money. It is not backed by anything, you know. And the difference is paper money, you can print as much as you want, even electronically, push a button, money is printed, that's it. With gold, you cannot push a button and print more gold, right? So it takes heavy machinery, a lot of effort to dig it out of the ground. That's why the supply is slowly increasing, and that's why the supply is much more restricted than just this paper over here. Here you see this chart we just seen, the reduction in purchasing power of the fiat paper money. Gold, if shown in US dollars, is going up. What does it mean? It's not, if you buy gold, for example, it does not mean you're getting more wealthy. It just means your purchasing power stays intact. So it's a superior savings medium, basically. This means, although the paper money goes down in purchasing power, the gold will keep your purchasing power constant. This chart is just in US dollars, that's why it's going up, but in effect, your wealth just stays constant, and gold will buy you 30 years ago the same as it buys you today, roughly speaking. All paper currencies go to zero. There are more charts like this. I could not even fit them on the slide. That's through the money printing. This is not theory, you know. It's proven and proven over again everywhere. The result is the thing is going to zero and will become worthless. Case study, Argentina, one generation, lost all their capital. 3 times over or something like this. Everything lost. Why do central banks hold gold? If the money is so sound and so good, why do they even need gold? Apparently it's maybe not so good after all, you know, and they're preparing for everything, they're buying more. Now, why are rich people getting richer? I want to show you this with one example. For example, here we have on the right side, maybe I get over here quickly, that we have, for example, a rich people goes to the bank and wants to buy an asset. So the asset value is 10 million, and the rich people don't want to spend the 10 million. Why? The money is freely available, right? So he loans 9 million from the bank, and he just supplies 1 million of own capital of the rich person. And now basically what is happening is the rich people borrows 10% or uses 10% of equity capital, borrows 90% as 0.5% rates, which is free money. And then he goes out and buys high quality assets. So he uses the paper money, borrowing it, leveraging up, and buying high quality assets. For example, real estate at 5% yield. So the difference is, this is the so-called carry trade. One example of it, that you have a positive carry of 4.5%, 5% of your assets that you buy, the cost is 0.5%. In absolute terms, 45 grand in cost, and the income from the cash flow of the real estate, of course, is 500K. And on the right side, we see also all the printing of money. The demand for the assets is still there. So Money is getting devalued, assets are appreciating. In this case, we assume maybe 10% increase in the property value, right? So this means the asset value is now 10 million, it's now 11 million. So you have 1 million return from the appreciation of the property and also the 500K of cash flow, 1.5 million return. Your investment, because you only supplied 1 million and loaned 9 million, is 150% ROI, you know? This is how they leverage the system. This is what they use in different forms. And you, as a general guy, you cannot borrow that much money at those terms, you know what I mean? It's only for the rich guys. And of course you can do it in similar ways, but the point here is just they know the stuff, they figured it all out, they're using it over and over again. Also about taxes, one of the biggest costs. Living cost is very important, analyze it, optimize it, but taxes, don't underestimate it. It's a big chunk for an employee, maybe 45% tax, just roughly speaking, of course, but business owner 20% tax, investor maybe 5% tax, depending how you optimize all of this. Obviously just guidelines, but the question is, why are they taxed that differently, you know what I mean? Why is the employee taxed at 45%? Kind of does not make sense to me. Why are they robbing? They worked 100% of the hours, but 50% is just tax, and then you have even inflation on top of it. This means 2/3 of the money goes to someone else, 1/3 of the money goes to yourself. I don't think that's fair. And that's why you need to optimize this, you know what I mean? Use the tactics they use. The system is rigged. You see here the US Fed chair of the central bank in the US. Where does he come from? From asset management firms, investors basically, you know what I mean? They all know each other. It's the same system, same bodies. The Federal Reserve has member banks, JP Morgan Chase, Bank of America, and so on. And you see, if you analyze who is owning, JP Morgan Chase, it's Vanguard, it's BlackRock, it's the most powerful institutions in the world. They're all asset managers. They control 9.5 trillion for BlackRock, and for Vanguard 7.2 trillion. So, for example, if we take the 9.5 trillion, it's 9,500 billion. It's a lot of money. US GDP is 23 trillion. So, you know what I mean? They have a lot of power, a lot of influence. And also, if we look at the political donors, it's again Goldman Sachs, JP Morgan, and so on. You see, they're funded, and then they make the decision. So it's all one clan. And of course, no matter what they tell you, don't believe them, but you should leverage their know-how as well to just protect yourself, you know. How to get financial success by investing. So this is a simple wealth formula, and please don't underestimate it because it's very powerful and it's just simple math, and without it you cannot get success. Of course, you've heard some of this 1,000 of times, but you need to apply this in your life, you know, not just a theory, apply it over and over consistently. Increase income, decrease your living cost, decrease another big cost factor, which is the taxes, and that way you have more investable capital available, and you sell your paper and you buy the assets, because we said paper is getting devalued, you don't want to own it, that's why you buy the assets. It almost doesn't matter what type of assets. Of course, you want to buy high quality assets. That could be, for example, stocks, real estate, crypto assets, something like this. Everything that is limited in supply and in high demand, paper currency, supply is going up, and you know, there you lose basically. Increase income, how are ways to do it? You can basically just ask your employer, make some arguments why you deserve better income, change employer, change your field, whatever it takes, create a side hustle, side business, invest your income, anything is possible. Just try to get this number up, decrease living cost, analyze your living cost, make some buckets, what are you spending, what is relevant to that you can live your lifestyle like you want. And then we heard from Johnny and also from Dean, minimalistic living, right? So maybe you can identify some areas in your life where you can apply this minimalistic living and decrease the living cost, you know what I mean? You feel maybe a bit more free, more relaxed, more at ease. And this is a nice way how you can combine this simple wealth formula with a nice lifestyle. Optimize taxes, this is of course important. Get a tax advisor or someone who has know-how. I'm sure in this community there are a lot of interesting people who know about this. Optimize it or learn it yourself. And invest in Grace Asset, we talked about it. Now, this is a real example of myself. I made all the mistakes in the book. I was you, I had no knowledge, but I still did it anyway. And so basically I had here high living cost, low income, was broke, felt broke, made and lost 200K because I thought I want to get rich quick. Sounds nice and easy, but turned out I was not a genius, so I lost everything, all the 200K. And then basically I increased income and also decreased my living cost and tried to build wealth, tried to learn more, spend more on courses and everything like that, learn from the best. So this is my 1-bedroom apartment, trying to live like a monk basically and just trying to get better, you know what I mean? I invested in real estate, German properties with bank loans, public stocks, commodity stocks, then also in private companies, tech startups, hold them for years, and crypto assets, of course. So I tried everything, did everything, and invested in everything. So everything I talked about to you today, I did it. And 90% of all my wealth is just created from investments. I moved to Cyprus and I have a much better life because I just can learn about other things, you know, than just money and working. I can learn from you different things about traveling that I have a lack of know-how, you know what I mean? And this is very enriching for me being in this community. Here you see great assets, the total return. So you don't want to be analyzing just a 10-year history of charts or something like this. Better pick, I don't know, 100 years or 200 years, because then you see the real difference. What is a high quality asset and what is a low quality asset? For example, you see the bottom graph where the curve goes down. This is just the US dollar or cash. We talked about it, the purchasing power goes down. So this is the toilet paper we talked about. Then the gold, the commodity money, is staying constant in purchasing power terms, in real terms, so inflation adjusted. Your wealth keeps intact if you save in gold. Then we have the bonds. They give you interest, so higher return, curve goes up. But especially the stocks, because what are stocks? They are just productive businesses. They provide real value in the real economy to people. You know, they increase the living standard and so on. So that's why they have the superior performance, because it just makes sense. Our living standard, everything is about the business, you know what I mean? And they provide real value, and that's why they get the superior returns for a high number of years. But not only stocks, it's also about real estate. I would say even similar, a curve like that going rapidly up, especially if you use leverage in an intelligent way. And also crypto assets, which are totally underestimated. They give you even more superior returns. Do not underestimate this asset class. It has, in my opinion, tremendous potential. If you're not in it, study it, learn about it. I think this is a really super, super high potential with very little capital to grow your wealth. Okay, so the point is what I want to say about investing. Don't go for the risky stuff. You know, buy high quality, reduce your risk. You always want to protect what you have, your capital. Step number 1. Step number 2, grow the capital. And you have a high chances of that if you buy these high quality assets, you know. And always remember, paper supply, if it's just one thing that you remember from this talk, paper supply, money printing goes up, assets are limited in supply, everyone wants them, Tesla shares are limited in supply, Bitcoins are limited in supply, real estate, prime real estate is limited in supply, but everyone wants it. You know, that's where you have to go. I also have free stuff available. You will find all of this later when I send the slides. Don't worry about it. So you will all get access to this. But I also share free information about, I don't know, a PDF or videos, whatever it is. Also have a YouTube channel, so please check it out. And yeah, you can get more information just like this for free. So, and we can also stay in touch. So we will have my email address. If you're in Cyprus, hit me up. We can go for drinks or do anything and just stay in touch. So basically some investing terms, I quickly want to say something about this. It's basic accounting for investors or like yourself. What is an asset? An asset is something that puts cash in your pocket every year and increases your wealth. That can be real estate, stocks, and so on, crypto assets. Now what is a liability? A liability is just a debt, a loan from the bank or your friend, nothing else. And if you have the assets that you own, it's just the stuff you own minus the debt you have, is giving you your net worth or your equity. This is after deducting the debt, this is what you have basically in capital. This is your net worth. This is the easy calculation. Now on the other side you have income, 2 types, cash flow income, for example real estate, you have the rent income or the appreciation income when the real estate prices go up. And for stocks is the dividend, which is the cash flow, and the appreciation income is if the stock price goes up. This is some important stuff. Now we have 3 cases here. I briefly want to go over them. A worst case, a person A, blue worst case with 10K of capital and 50K of pre-tax income, 45% of tax. Then we have the next step, base case, 50K of capital or savings and 75% of income pre-tax and then 40% tax. And then we have the best case of 250K of capital, 100K income pre-tax, 35% tax, for example. Just some numbers to get some idea what's happening. Now, if we plot all of those three types or three cases, then we have here a chart that gives you the number of years it takes to reach 1 million in assets or net worth, and it is plotted over your annual return, okay? So if you have investments, you make an annual return, and it can be 8%, it can also be higher. 8% is maybe more a market return, but the point is this, in your lifetime, you will probably, if you do this consistently, you will reach that. You know, it's just simple math. Just with the savings available, even with lower income and lower capital, you can make this work, and you will reach it. And the important thing is, even though in this extreme case, in the worst case, it takes 26 years to get to 1 million, imagine just having 100 couple of K in the bank, you know, it makes your life easier and better, I think, just to have this. And this takes much less. And now imagine if you increase your income and decrease your living costs, then you lower basically, go lower in the curve, you know what I mean? You achieve this much more quickly. And then in the next step, you get a little bit more know-how. You increase your returns. You don't have the market returns, but you not get the 8%, maybe for a couple of years you get 20 or 30%. Yes, you cannot do it maybe for 50 years like Warren Buffett, but can you do it for 3 or 5 or 6 years? I think you can. And that's why, you know, if you go then more to the right side, it just shows you the potential that you don't need all this money, you know. And this is just what I want to show you and motivate you to get started with this, because this is very powerful stuff. Great investors have tremendous returns. So basically here you can see, I will tell you the numbers because it's too small. At the top is Richard Dennis with 120% annual return for 19 years. So getting more than 100% even for a couple of years, it's possible, you know. It's not so unrealistic to do it for a couple of years. And even Warren Buffett, 23% for 54 years, you know what I mean? It's like crazy, crazy wealth building. And the longer you do it, the more profound the results will be. And I just want to motivate you. You can have superior returns. You can beat most professionals. Most suck actually at their job, because in professional funds you have a lot of things going on that is actually a lot of restrictions on the fund manager and so on. So there are things that you can do as a private investor that they can't, you know what I mean? So just get encouraged, and there's potential. Also, if Bitcoin can make 5 million X in return, why can't another investment make 500X versus 5 million X? Of course, you need to be early and all of that stuff, but still, you know what I mean? Most people, they just want to have some toys, I don't know, buy a fund liability for 200K, but this is how you stay broke. You want to buy the assets, boring assets, that no one wants, you know what I mean? Here, 2K invested in a boring investment, then in a couple of years, maybe a private company goes public, you have tremendous success, and this is now worth $1 million. I mean, is this unlikely? Yes, but is it unrealistic? No, it's not. If you do investing systematically, good things will happen to you. And this is just what I want to show you. So we have, what did I write here? 8 billion people worldwide. We have 56 million millionaires. We have 2,755 billionaires. And the question is, do you think that the millionaires and billionaires do exactly the same thing like the rest of the population? No, it's not. They do different things. They go against the crowd. And most people want to get rich quick. This is the left side. I know some of you are very professional traders and make a lot of money. I have all the respect for you. I just am of the opinion that for most of the people, this is the wrong approach. You know what I mean? Even though you can make money and it's, of course, viable model. But here you have active trading, penny stocks, futures, options, high leverage, and so on. You know what I mean? This is not the way to go. Go to the right side. That's what I would recommend, at least what the pros are doing: investing, buying and holding for a long time, high quality asset, systematic approach, no leverage except in real estate, long-term wealth growth, long only, no short selling, and so on and so on. You can read all of this later, but the point is, you know what I mean, do the boring stuff. The boring stuff will give you the results much, much, much faster than you think. Here I want to show you one concept of value and price. So price is what you pay for assets or investments. Value is what you get. Imagine a steak, Wagyu steak, perfectly done, high quality stuff, and you can buy it in a restaurant for $10. So the value what you get is the nice steak, you know, a very high quality meal, but the price you pay is just $10. In that case, of course, it makes sense to buy the stake for $10. With assets, it's not different, you know what I mean? You just try to figure out what is this stuff worth and what is the price you pay. And basically, in all types of assets, stocks, crypto assets especially, you have a lot of volatility. This means investors are human beings, they buy and sell, but they are driven by emotions, even the most professional ones. And this means why you have this boom and bust behavior, prices going up and down all the time, and most people, most amateurs, they buy in at the top when they should be selling, and the pros are selling. You know what I mean? And that's, I just want to say, the more people are fearful right now in the markets, for example, it's more a buying opportunity than a selling opportunity, in my opinion. Of course, not all in, but systematically, slowly over time, building a position. When there's fear in the market, that's what you want to build a position. Why? Because the price is below the value. You're getting actually quite a good asset for relatively low price. And if you hold this for a long period of time, maybe a couple of years, then good things will happen. And this is how good investors are doing this. If you buy in over here, then basically you get above average returns. Otherwise, you will get bad returns if you buy in at the top. And one thing, if you don't want to time or optimize the timing, it's perfectly fine for you. You can just buy every month the assets, no matter where the price is, discount average buying. And this means you will buy in here at the low, you will buy at the top, but we will all buy in at the medium. So this means the price you pay will be roughly around value. This means at least you get the average return, and this is always also a good way to do it without getting too emotional about it, you know. Stick to the plan, very easy. This is another slide. I would like to almost skip it. You can download it and look at it later. What is a typical investor portfolio maybe looking like? Of course, there are huge variations, but just plugged in some numbers and just wanted to show you how powerful this can be. Here's assumed 5 million of capital, but even if you have just 1 million of capital, you can so nicely work with that money. It's amazing. You know, it's not that you need so much. You can sustain yourself already with low capital. Also, if you have limiting beliefs, I just want to show you with this slide, you know, there is no boundary. Especially, I think, in business and also in investing, there are no boundaries. So don't get stuck that you think you cannot reach that or anything like this. I mean, everything is possible, and I think for you as well. So don't get those limiting beliefs and stay open. And to sum this all up, basically, the number one thing we talked about, the money printing, supply is going up. If you're safe in cash, you're getting devalued. That's why to buy these high quality assets. That is why I think in today's world you need to become an investor, because the cash is the currency is not safe. It gets devalued through the money printing. And use the simple wealth formula. I have here a lot of more points, but it doesn't matter. You can read up about them, get some more information. The point is, use the simple wealth formula, increase the income, decrease the living cost, decrease the tax, buy the high quality great assets, and you can adapt this to your own style. And basically make real estate investments or crypto, whatever you want. You can go anywhere. There's always ways to make $1 million. So there's a lot of different ways how you can do it. So the last thing I want to touch up, I also help other people with investments, and also have a program, Mastering Investments. That is a video course that shows you in 16 hours everything I know about investing that is, in my opinion, relevant and also can be done by total newbies, applied successfully. And you not only get this video course, this is just the basics, you also get private mentoring from me included in that. This means we will, after you complete the course, we will get together, analyze your situation, make a plan, and then that you know exactly what to do, what to buy, have a fixed plan, and without worrying and spending too much time, implement this in your own life. So if you're interested in that, I have here a discount available. The discount code is Nomad, and it expires basically on Sunday. So if you're interested in that or want to talk about that, just let me know. And that's pretty much the end of this talk. So I'm happy to hear any of your questions. Thanks.